Oh, hello, hello, doing well.
Awesome, awesome. Great. Glad you could join me tonight. This is
Yes, thank
Thursday.
you.
This is Thursday, May 1st, and we're having my first virtual first-time homebuyers webinar. Um, and we'll be here for about 45 minutes, and I'm just going to go over some of the steps if you want to become a first-time homebuyer in the state of Texas. So we should have some more people popping on here, but for the sake of time, I'm gonna go ahead and get started, and then I'll send out the recording afterwards for anyone who joins us later. So these are some costly mistakes that I don't want you to make. So how are you feeling today? Put in the chat how you're feeling. You feel excited, concerned, stressed out, intimidated, anxious, uncertain. If you're a first-time home buyer, I'm sure you have some of those feelings. Excited, that's great. I'm excited too. Being a homeowner is a very fun thing to do. So for our agenda, I'm going to go over the top reasons that you should own a home, the home buying process, dispelling any myths, and the truth about today's housing market, and why you need an expert. So if you have any questions, just go ahead and put them in the chat. I'll answer them at the end. And I do have a break coming up where I'll look and see if I can answer any questions that you might have. So you're probably asking, who am I? Who is this lady on here? Well, I'm a mother, a wife, a grandmother. I believe in multi-generational living. My 86-year-old mother-in-law lives with us, along with adult children and grandchildren. So what we want to do is live together, help each other out. We like communal living. I don't want to live, across town from my kids. And Houston is so big that I'll never see them except maybe a holiday or something like that. So we chose to live together. And my tagline is getting you across the finish line to home ownership because I am also a lender with Loan Factory. So I'll be able to help you in that aspect as well if you need financing to get a home. I've been in real estate now since 2018. And these are some pictures of my family here, my granddaughter, my husband, of 41 years and my three grown children. So that's why I do what I do. So I want you to meet the team. We're called a one-stop shop. I have myself, I have Janila, who's another realtor, Teresa, who's another realtor, and Ursula, plus two interns that I am helping to.
Sit
Uh,
in, Ursula.
Ursula, I think you should go on mute.
No, she just introducing us.
Okay, so like I said, I've been licensed since 2018 with eXp Realty. I've been with Loan Factory since 2023, and I'm only licensed in Texas. I serve the Houston metro area. Ursula's up in the Dallas metro area. We work with title companies, transaction coordinators, inspectors, insurance representatives, uh, anybody within the housing industry we can put you in touch with. Ursula, did you want to introduce yourself? Or Janila, did you want to introduce yourself?
Yes, hello, Janila Brown. I am a realtor, like Vanda said, and just happy to be a part of this webinar. I do service more of the northwest corner of Houston, and always willing to help any home buyers, first-time home buyers. My tag is to educate, empower, and encourage you.
And she is my partner when we do Ask the Experts every second Wednesday of the month, where we handle a topic and we're, go live on Instagram and Facebook for about 15 minutes. So if anybody has any questions, we can respond to those then and there. How about you,
Hi,
Ursula?
you see me?
Yes,
Oh my God. Hi, everyone. I guess we're going to keep it very real on here.
we
I'm in the
are.
I'm in the process of moving from one house to another. So, but I wanted to get on and say hello to everyone and encourage you to get out and buy that home. I've been in the real estate business over 30 years as well. I've been on both sides of it as a loan officer, an underwriter, now real estate agent and whatnot. So we between the three of us here, we really have a lot of support and knowledge here where we can help everyone here achieve that American dream, as they say.
Great, thank you.
Hmm.
So if you stay to the end, we have about $1,000 plus in goodies for you. So that's an incentive to go to the end. Now, if you get this recording, hopefully you won't fast forward and go all the way to the end, but but that is an option that you have. What are the steps to home ownership? First, you have to learn about the process. Having a home is something new and the terminology is new. Like, what is escrow? What does the title company do? So, coming to a class like this to learn the process is step number one. Step number two is getting pre-approved with the mortgage broker. Like I mentioned, I'm with Loan Factory, and I can also help you get pre-approved with that. I can get you the first time home buyers qualification, see if you qualify for any of those programs. And we do have a guaranteed approval. Now, you may not get guaranteed approved this month, and it may not be next month, but if you work with us and stick with us, we will definitely get you approved. Again, another fine print, you may not get approved for that $500,000 house that you really like, but you may have to settle for a starter home, maybe 250, 300,000, but we can't get you approved. So you go house hunting with your realtor. You tell them what you're looking for. If you want two-story, one-story, you want to be in the burbs, you want to be in the city, we find the perfect house for you. Then you offer and negotiate. You do your home inspections and your condo review. You finalize your financing because once you're approved, then you have to submit those documents to prove that you have what you say you have. We have to, talk to your job, make sure you're still going to have a job. Nobody really knows that now, but make sure that you are employed where you say you're employed. And then we also, in Texas, we close with the title company so that your money and your funds go through a third party. You do not give that money to a realtor directly. And then you move in and you celebrate your new home. So some things to consider. Um, do the benefits outweigh the change of your apartment if you're in an apartment? If you're paying rent someplace, you want to change to a home, it's going to take some changes. I talked to somebody yesterday. They told me they had a visitor come over. They were only there like an hour. They lived in an apartment and they got their car towed. So some things like that makes people want to get their own house and not stay in that same living situation. You can't really paint the walls the color that you want to. So maybe you want to change and redecorate your whole house. You can't do that in an apartment. Or if you do, you get fined for it. So it's going to cost you. So how does your current situation benefit your financial and wealth goals? And do you have goals and a plan? Some people are just living and don't even have a goal. They just know that they're going to be there throughout the next cycle that they sign their lease. And you have to give 60 days notice normally, but what are you going to do? You're going to keep re-signing or you're going to keep giving the landlord money. So those are some things to consider. If you're only going to be in let's say you're moving to Houston, you're only going to be here for 2 or 3 years, it may not make sense to be a homeowner. So go ahead and stay and rent and lease. So why own? Because of equity building. You're putting money aside every month and you're building equity in that house. Stability and control. You can personalize your environment, the tax benefits, long-time investments, and ability to protect and transfer. So you can also transfer that house to your siblings or to your children. Um, So those are some good benefits of why you want to be a homeowner. I look at putting money in a house kind of as a savings plan because a lot of people would take money out for like second mortgage when they want to send their kids to college. They didn't save for that, but they know they have it in their house. People my age are looking at that as pulling that money out for retirement because they didn't, their 401k is down, but they know they've got their house value has doubled in the last 10, 20 years. So it's a good way to save money. Mistake number one is in ignoring the first-time home ownership incentive programs. So there are a lot of them out there. They're specific by your state, your county, your occupation. There's some just for health workers. There are some just for first responders. There are some for veterans. Some of them are dependent on your income. Some of them have a forgivable second mortgage. Some have down payment assistance. And then compare all the money that you're getting and see if it's really free. Because sometimes you have to pay that money back if you don't stay in that home a certain number of years. So the one, even though I'm a lender, I always send people to NACA because I think NACA is the best one because they have no credit requirement, no down payment, no closing costs. You get below average interest rate. But the thing is, you have to actually give them your bank statements every month. They want to know what you're spending on Starbucks, what you're spending on Tubi or Netflix. And so they're going to look at that. And a lot of people don't want them looking in their business like that. So they bypass that. And the process takes a long time. And I say long time, it could take years. So watch the fine print, as I mentioned. If you move out, some of these down payment assistance programs make you pay that money back if you don't stay there 5 to 10 years. Some grants have minimum incomes and maximum limits on the household sizes. Only certain homes qualify. Some of them don't let you get in a condo or a duplex. And then if you're on a title, even if you're not on the mortgage, it can exclude you from some of those programs. Some of them you can't stack. Some of them you can stack, but you have to look and see which ones you can and you can't. And that's why you would come to a professional. We look at all that and see. And because things change all the time. So what might have been last year may not be the same this year. And then in most of them, you have to attend a mandatory homeowners education class. So there are different types of mortgages. There's a conventional, non-conventional, we call them non-Q, non-qualified, FHA, USDA, and VA. And these vary by the lender's requirements. And then there's also seller financing options out there as well. If you want me and my team to start building a list of programs that you qualify for, go ahead and scan this QR code and we'll get working on that right away. Federal Housing Administration loan, or called FHA, those provide mortgage insurance on loans made by the FHA approved throughout the United States. So that's just a guarantee. The benefits of FHA is the low 3.5% down payment with a 580 score. Credit scores can go as low as 500 with 10% down. And again, these vary by lenders. So sometimes there's overlays on there. Easy refinancing with FHA Streamline, low mortgage rates. Sometimes you get a higher DTI ratios accepted. You can choose between a 15 or 30-year fixed rate or an adjustable rate term. Down payment assistance programs or grants can be accepted with those. And the seller can pay closing costs up to 6%. Benefits of a VA loan. If there's any veterans out there, thank you for your service. These are guaranteed by the Department of Veterans Affairs. These are no down payment, no minimum credit score, no monthly mortgage insurance premium. You have favorable mortgage rates. There's no max DTI ratios, caps at which closing costs can be paid by a veteran, and seller credit can also help them pay off their debt if they qualify. And the seller can pay closing costs up to 4%. Again, these are some overlays that there are overlays that some lenders may have in addition to this. So just because we say you don't need down payment doesn't mean you can't come with no money. You still need money in order to get approved for a loan. There's option money that's required. There's closing costs that still you have to pay. So you have to come with some money. So I always say if you have $5,000 to $6,000 saved up already and it's been in the bank account, we call it seasoned for at least 3 months, you're ready to buy a home. So the benefits of USDA loan is no down payment also, minimum credit score of 620. And these properties can only be in rural areas. So these are address specific. So we may have a rural area and we put in that address, but that particular property doesn't qualify because there's more people maybe within a 10-mile radius than in other places. Fort Bend and Brazoria County, they have several USDA areas. Again, it's address specific. And the closing costs can be rolled into the loan, and the seller can pay closing costs up to 6%. DTI stands for debt to income ratio. So we look at your bills, your debts, and we look at your income. And it's a calculation formula, and they look at that, and that's how they determine a good DTI. A good DTI is around 40, 30, well, anything under 40% is good. 35%, 41%. When you get up to 50%, that's kind of sketchy. Not say it can't be done, but it's just a little bit harder. And then, of course, there's conventional loans. Conventional loan is when the home buyer's loan is not offered, or secured by a government entity. So it's available through or guaranteed by a private lender or two government-sponsored enterprises, which is Fannie Mae and Freddie Mac. And the down payments can range from 1% to 20%. I know Rocket at one time was doing a 1% conventional. They might have changed because, as I mentioned, things change all the time. So I'd have to look at I'd have to go into my notes and see what's current right now. But usually they go from 1% up to 20%. And a lot of people were thinking, oh, I can't buy a home because I need 20% down payment. At one time, that was what everybody was thinking, but that's not true anymore. What can and can't you use for down payment and closing costs? You can use your 401 retirement accounts. A lot of them will allow you to withdraw money from that to use for down payment on a house. A lot of people thinking they're looking in their bank account like I can't afford it, but you got money growing over here in your 401k. You can use that money. It's not just for retirement, but if you take it out, they want to make sure that you're putting it towards a house and you can pay that back without any penalty. You can get gifts from family members. There are some GoFundMe accounts out there for people trying to get down payment assistance from friends and family or strangers. You can use stocks, bonds, and like I mentioned, of course, cash is always king. What you can't use is credit card. You can't take your credit card and go get cash off of it. You can't say, well, I got $10,000 limit on this credit card. Can I use that? You can't use that. You can't go take a payday loan for your car and go get that and use that. You can't do that. And the money has to be documented. So you just can't all of a sudden drop in $5,000 into your bank account because your lender is going to want to know where that came from. Now, if it did come from a gift, then we're going to ask whoever gave it to you to give us a gift letter. And they'll probably ask for a copy of their bank statement where it came out and a copy of your bank statement where it went in. So it's a whole lot of ways of doing it, but it can be done. Buyer's eligibility is based on underwriter's review, your ability to repay the loan, your willingness to repay the loan, and the collaterals, the down payment assets. So Ursula, I'm going to ask you, because you were an underwriter, what are some of the, let's see, what question do I want to ask? What are some of your biggest underwriter responsibilities?
Just like you said, basically looking at the overall credit, looking at a person's ability to save. Do they have the wherewithal and, like you said, the ability and the desire to pay. People can have the money to pay their bills, but don't pay their bills, you know. And so we want to make sure that people will pay their bills on time, and especially looking at sometimes someone can have some tricky credit and whatnot. But if I can see that a person is paying their household, paying their car note in order to get home, you know, to go to work so they can take care of the roof over their head and provide a roof over their head. Those are the type of loans that you want to do. So we're looking at that. We're looking at your assets and your spending, like you said. Is this someone who's living paycheck to paycheck because they're overspending, they're extending their credit, extending themselves too far in those ways? So we look at, like what you said, the ability to pay, the willingness to pay, and if we can save as well, you know.
So when we have to give you a copy of their bank statement, you actually look at everything that they're spending on their bank statement?
Well, I mean, I'm not well as the underwriter. Not some of these other programs are correct. They look at every brown penny that goes in. But just as an overall basis, when I look at a bank statement, I'm looking at the deposits, let's say, for instance, and I can see a person's payroll going in there, or maybe their child support or some social security. And you see it's a repetitive, so you know that that's there and that's stable type of deposits. All of a sudden, if I see a $5,000, $10,000 bank deposit into the bank account, then the next thing I want to say is, well, wait a minute, where did that come from? Because that is not common for them. And we would look at anywhere from 60 to 90 days, so 2 to 3 months worth of bank statements. We would look at that. And we would look at 60 to 90 days of bank statements. And we look, and as long as we don't see any large deposits, we're fine. As far as looking to see what is being spent on, yes, we look to see, like if I consistently see that John is paying Samantha $500 every 2 weeks on a consistent basis, then that might be some child support that you didn't tell me about, that you're
Oh,
paying outside of the courts. If I see that you have a BMW payment that has happened 2 or 3 times, and you're like, wait a minute, he's paying BMW every month, but I don't see the loan on your credit report. And it's like, okay, well, did you pay it off? Are you paying a car note for someone? So we do look at it, yes, but I'm not going to question because she's going shopping to Ross or Nordstrom's or whatever. I'm not going to do that, but it does paint a picture for you.
okay. All right. Good information to know. And that was right in our 5-minute Q&A. So we're gonna just keep moving along unless you guys have any questions. Okay. Mistake number 2 is not getting a pre-approval. So the pillars of the mortgage approval is credit, income, and down payment. The loan pre-qualification helps us determine how much you can afford. Worst thing you want to do is go shopping for a house, fall in love with the house, and realize you cannot afford that house. And you might be saying, well, I make good money. I can afford this. But we also have to look at your bills. Are you going to be able to continue to pay your bills? You don't want to just be house poor. That's all you can have is a house. And you can't pay your car note, your insurance on the house, and things like that. So pre-qualification can help us determine what house you qualify for, increase your bargaining power when negotiating with the seller, estimate your monthly payment and total investment, and identify which loan products will fulfill your needs. Also, here in Texas, we have to look at the tax rate and if there's any HOA, because the mortgage payment may be one payment, but you have to look at the taxes, the insurance, the interest, and all that, and combine that together. So, tips for a simple loan approval, and I say simple, I use that word lightly. Uh, do call us if you have any questions. Continue living at your current residence. Continue paying your mortgage or your rent. Continue to use your credit as usual. Keep working at your current employer. Please do not change jobs in the middle of going through a pre-qualification. Keep your same insurance company. Stay current on all your existing accounts. Expect requests for additional documentation throughout the process. Don't make any large purchases. Don't go out and buy that furniture that you know would go good in this place. Don't do that. Don't change bank accounts or make any large cash deposits. Don't transfer any balances. Don't close down any of your credit card accounts. Don't consolidate your debt into one or two credit cards. Don't apply for any new credit or take out a new loan or co-sign on a loan. And don't max out or overcharge on a credit card account. So your pre-approvals are underwritten. They will look at your income, your credit, your down payment source. So they're going to see the bank account statements. It'll tell us the maximum qualifying amount, what you're qualified based on that information. And then at that point, you can get a rate lock. So that means it'll hold your interest rate for a period of usually 30 to 120 days. With the interest rates fluctuating, you might say, well, I like the 6%, I'll stick with that because we don't know if it's going to go up. We don't know if it's going to go down. Janila says, please don't change jobs and make large purchases until after closing. Right. Ursula agrees. Don't do that. I had a person that did that right before closing, and he had changed jobs and went and got a commission job from an hourly job, and his loan got denied 2 days before closing. So I do tell people don't do that, but if he got fired, that's one thing, and had to go get another job, but he didn't. I had people go purchase a Range Rover a week before because they thought we got the closing date okay. But right before closing, the day before, they will rerun your credit and they will call the job and verify that you're still working there. So after closing, once you sign on the dotted line, you can go do all of that stuff. Okay, in Texas, we have $1,000 money back guarantee with the Loan Factory. So look me up for that. We say we're the lowest, and I encourage you to shop around. We will get you the best rate at the lowest amount of money out of pocket. Sometimes you get a low rate, but the fees that go along with it make it more. So you always have to look at the fine print. I think I got a slide on that coming up. Mistake number 3 is using your bank. Banks don't have everything. You might bank with, let's say, Chase, for example. Chase can only offer you a Chase product. So if you work with a mortgage broker, we can offer you more, get you more options. And then it's all about the monthly payment. It's not about the house is 300,000 and this house over here is 250. I can't afford this 250 because the HOA, the monthly and all that, but I can afford this 300,000 because it's in a certain area, the taxes are low, the insurance is low. So we have to look at all of that. Yep, welcome to Texas, y'all. Some of the bank penalties are very expensive. They'll charge origination, discount points. They have usually stricter guidelines. They don't cater to all situations. They may not offer down payment assistance. So again, shop around and compare apples to apples. And just like all restaurants are not the same, you can't go to all restaurants and get a lobster dinner. You can't go to all restaurants and get a steak. Sometimes they don't sell, certain cuts of steak that you like, but they're all considered restaurants. So mortgages and loans are the same way. We all loan out money, but they're different. And if you want a complimentary analysis and free credit repair, Scan my QR code. Is it showing up there, or because I have stuff over my chat over here? Is it showing up, the full QR code? I hope so. I'll move this over here. Okay.
Yes, we got it.
Okay. Mistake number 4 is buying directly from a builder. How many people have you known to go directly to a builder and think they're getting a great deal because they didn't go through a realtor? Oh, they offered me this and I got this incentive and they're giving me this. Oh, well, they're not giving you anything. The salespeople that work for the builders work for the builders. So you're going to pay full price and there's no negotiation. They're going to overprice the upgrades, sometimes get limited warranties. And then for some of those incentives, you have to use their lender for a lower interest rate. So Janice, it happens all the time. Yes, I know. We tell people use us, we'll negotiate for you, but they still, I was just driving on a Sunday and stopped in here. If you do that, that's fine, but just make sure you tell them, I have a realtor. I have a realtor. She couldn't make it with me here today, or call them so we can call over there and register you with that builder. So that's all it takes is a registration. They just want to know that you're represented. Sometimes closing costs can be a bait for a higher interest rate. So yeah, we'll cover the closing costs, but then the interest rate, they're going to get their money back in the long run. And a realtor can help you make the best decision financially as you build. I know some people that did not take any of the builder's incentives and went with another lender and they netted more. So they didn't have to spend out as much money. So you just have to compare apples to apples. So raise your hand if you like the idea of leaving thousands or tens of thousands of money on the table. I don't see any hands going up. I didn't think so. And mistake number 5 is skipping a home inspection. So the big ticket items, the 5 major expenses are the foundation issues, roofing, plumbing, electrical, and HVAC. You definitely don't want to live in Texas without having a good AC unit. So you want to have your inspection. Inspections only cost between maybe $500 and $700, but it's an expense that's well worth doing up front. Even for new construction, you think everything is new, they got all these people in there, they get inspected. Still, there are human beings putting these houses together. So anything can happen. They look over a lot, they see a lot. So have your own individual inspection for a new construction home. You purchase a home unaware of deal breakers, you lose your negotiating powers, you risk inheriting non-structural safety issues such as mold, radon, and carbon monoxide. Um, you miss having a forecast of future repair costs. So inspector will tell you like, well, in 5 years, you're going to need your roof replaced. It's okay right now, but it's, 5 years, that's going to happen. And then, of course, any obvious or illegal code additions or remodels, they're going to pull out. Now, your inspector, they're also going to pull out and show you some things that are cosmetic, and they'll put on their reports cosmetic. And they're going to tell you any safety issues, which is when, go negotiate, well, this electrical is a hazard and needs to be fixed now. It can't wait. Or we're going to ask for negotiation for money off for closing so that the new buyer can get this electrical repaired and done the way they want it done. And then skipping the condo document review. That's a bonus number 6. Because condos have homeowners associations that could be out of money. They could be assessing high assessments on the building. Maybe there's a roof and they want everybody that's there to pay and cover their roofing there. They may not have enough insurance coverage. And then a lot of them have a owner to investor ratio. They don't want a lot of renters in some condos. They want more owners there. So you want to make sure if you're going to get that condo, are you going to be able to rent it out or do you have to live there? So I definitely recommend looking at that. Okay, so for getting your credit together, don't allow someone to run a hard credit report yet. First, get the soft pull, and we can do that at no charge at Loan Factory. Most lenders don't tell you that. They want to do a hard pull, but a soft pull does not get reported on your credit. And then we can look and see what's going on your credit and help you get those resolved before we actually go through the hard pull thing. So don't be a hero. Don't try to say, oh, I got this collection on my credit report. Let me go ahead and pay that off. Don't pay it without talking to us first because it could backfire. And then run everything by us first so we can guide you. Because sometimes we'll have that paid off maybe at closing. So we know that that's going to happen and we know that that's going to get paid off. And then some of them can be so old that it doesn't matter anyway, and you may not have to pay it at all. I've seen that happen as well. Okay. When we find the home, what exactly do? We execute a purchase offer. So then you'll be asked to pay two fees. One is the earnest money. That's usually 1% of the purchase price. It's negotiable. And then we'll ask for an option fee. Commonly, that's $100 to $200. Again, that's another thing that could be negotiable. You will not get the option fee back. The seller retains the option fee for taking it off the market. And that's usually for, 3, 5, 7, 10 days so that you can get the house inspected. You can see if you're going to get your pre-approval for that address and how much the monthly payments are going to be. So you might say, okay, I need 10 days to go through this and see what's going on. And then on the 9th day or the 10th day by 5 o'clock, you have to terminate that contract or you're going to be continuing to go through with it. And you're at risk of losing your earnest money at that time. So your lender and your realtor will be, staying on you, make sure you don't skip those days. Step 2, you're now under contract. Now we make sure that your deal has legs. You get your home, your pest inspection. Usually that's, like I said, $400 to $600. If you're getting a VA loan, you are going to need a pest inspection. And so that could be another $150. And then secondary inspections could be, if your inspector tells you, okay, get your HVAC examined by a professional, because they're not professionals in all of this. So they can just look and say, well, there's some corrosion there. You might want to get that professionally looked at. Foundation, plumbing, any of those things, and it's still negotiable. So step number 3, you're renegotiating the deal. So let's say some things came up on the inspection that now you still want the house, but these things have to be done. So you pick 2 or 3 of the items and you want the seller to do this before closing. And then they have to do this by professional people with receipts and warranties. It can't be their brother who does electrical work that lives down the street. It can't be them. It has to be a reputable company. And then you can also negotiate for additional money or credit in lieu of the repairs. Let's say you have a brother who's an electrician and you want them to fix it after you sell it, after you purchase it. Yeah. So that can be negotiated. So now you come back and you renegotiate the deal. Step 4, everything gets quiet. You may get a request from the lender to go pay for the appraisal. The average cost of that's about $600, $700. And remember, this is not your cue to go buy furniture or Range Rover or anything like that. So you just sit tight, respond to any request that you get, and just hold tight. And then after that, you're going to closing. Hey, you pay your down payment, you bring that to closing. And any closing costs is not covered by the seller, and then you get your keys. Plan for a minimum investment of $5,000. Or if you're using a grant, you can have the seller cover some of those costs. And I've seen people, my first client got a check back at closing. He was a VA client. So I'm like, wow, that happens. So it does happen. Don't bank on it, but it does happen. So how are you feeling now? Does that sound better? Are you feeling more excited about it? Are you more confused? Are you still excited? Put in the chat. So a recap of what we talked about today is not ignoring the first-time homebuyers incentive program. Getting your pre-approval before showings is very important. Don't go to your bank for a mortgage. Use a broker with access to multiple lenders, including the banks and private investors. Don't skip a home inspection. Don't buy directly from a builder. Have an agent represent you so you ensure they have your best interests. Don't skip the condo document review. More excited. Yay. Do you feel confident in being able to purchase a home now that you've got a little bit of knowledge? Yes, having support from an agent and a team is very important because you don't want to feel like you're out here alone doing this. And you have questions that come up, and the team that we have, we don't know the answers to everything, but we can find it out. Is it fair to say that using these tips will give you a significant advantage when buying a home? I don't know what you knew about the process before coming to the webinar today, but I'd be safe to bet that we covered today was new and valuable for you. Thank you. I'm glad you're feeling more empowered. And I thank you for spending time with me for this free webinar. And I hope you found it interesting and time well spent. And if you want to spend more time with me or my team so that we can help you be successful, book a call with me. I'm offering consultations for a limited time to help you accomplish your homeownership goals. Click the link in the chat to schedule your consultation. And it's also on the screen. So you probably want to know what that bonus is. So if you close with us, we will give you $500 towards your closing costs. So that's free money. And I also offer a vacation value voucher for up to $1,500. So the voucher, you still have to pay taxes on the voucher, but it's a like free vacation, and you could go to Vegas, Dubai, Cancun, it's another part of Mexico, some other places. So we'll talk about that later once we talk. And then a portion of our sales goes to support the Charlene Crossley International School in Ghana, Africa. It is a 501c3 nonprofit. So we are trying to make a difference in the world. And you will see that on your closing documents where money will go directly to them. put the link for consultation in the chat. I don't have it up here. Uh, yeah, you're gonna have to get it from the slides. Sorry. And then I also can help you save money on your energy bill. So scan this if you want to save money on your energy. And it's with Think Plus Energy. So we're trying to help you buy a home, save money on your electricity, and take a vacation. What could be better than that? Let's see if I can take this off. Let's see if I can scan that. Oh, it's not letting me because I'm in presentation mode. And you can follow me on social media. I'm Vanda Crossley, the EXP Mentor on Instagram, and everywhere else I am Vanda Crossley. I'm on YouTube, Facebook, TikTok, LinkedIn, all over the place. Thank you. The link is there. Yay. Any questions? Comments?
You did say the consultation is free,
The
correct?
consultation is free. Information is free.
That's awesome.
And we're right on time. Okay, well, if there's nothing else, I'm going to let you guys go. And thank you for joining me. And if you have any questions, hit me up. Thank you.
Thank you.
Good night.